This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Natural gas buyers in Asia and Europe are seeking to lock in supplies via long-term contracts as a buffer against volatile global prices, industry executives said, in moves that will reverse the last decade's trend of increasing spot purchases. Fears of disruptions in Russian gas to Europe and low inventories led the continent to import record volumes of spot liquefied natural gas, LNG, driving prices to all-time highs earlier this year and sparking energy security concerns among buyers globally. Years of low investments mean new supplies are scarce while Russian supplies are at risk just as more countries have switched from coal to gas to meet climate targets over the past couple of years when LNG prices had been low.
U.S. crude stocks fell modestly in the most recent week, the government said on Wednesday, as refiners picked up the pace of activity, boosting overall capacity use to the highest levels since before the pandemic. Crude inventories fell by 1 million barrels in the week to May 20 to 419.8 million barrels, not far from analysts' expectations in a Reuters poll for a 737,000 barrel drop, the U.S. Energy Information Administration said. Refiners boosted overall utilization rates by 1.4 percentage points to 93.2%, highest since December 2019, on a 334,000 barrels of oil per day increase in crude runs.
Moving on to the top news in the energy sector.
Oil prices rose on Wednesday, buoyed by tight supplies and as U.S. refiners drove processing activity to their highest levels since before the coronavirus pandemic started. Brent crude futures for July rose by 48 cents to $114.03 a barrel by 10:50 a.m. Eastern Daylight Saving Time, 14:50 GMT. U.S. West Texas Intermediate (WTI) crude for July delivery rose 49 cents, or 0.4%, to $110.26 a barrel. Brent crude is trading in a very convincing upwards trend aided by very tight product markets, again leading to a hunt for light sweet crudes which are naturally rich in easily refined gasoline and diesel products, Swedish bank SEB said in a note.
Like the east coast of the United States, Britain was experiencing a severe shortage of distillate fuel oil even before Russia's invasion of Ukraine, which sanctions now threaten to make much worse. UK diesel and gas oil inventories had fallen to 1.57 million tons by the end of February, down from 2.23 million at the same point a year earlier, and the lowest seasonal level since 2014-15 and before that 2008. The country's passenger vehicle fleet is split between diesel and gasoline, but long-distance freight transport, local delivery services, small businesses and construction all rely on diesel. Next, we have the top news in metal markets. Europe's primary aluminium smelters are continuing to curtail production in the face of soaring energy costs. The region's output of the light metal has fallen by an annualized 550,000 tons over the last year, with the slide still accelerating. Aluminium smelting is an energy-intensive business and Europe's smelters were struggling with elevated power pricing even before Russia launched what it calls a special military operation in Ukraine.
Prices of copper and most other industrial metals fell on Wednesday on concerns that slowing global growth and COVID-19 lockdowns in top consumer China would depress demand. Benchmark copper on the London Metal Exchange (LME) was down 0.9% at $9,364.50 a ton at 16:05 GMT. Prices of the metal used in power and construction are down from a record high of $10,845 in March but still far above levels for most of the past decade. Weak U.S. economic data and Chinese efforts to control coronavirus outbreaks have fueled fears that a global slowdown could be more severe than many had thought, said Saxo Bank analyst Ole Hansen.
We will now look at the top news in the agricultural sector.
India has no immediate plans to lift a ban on wheat exports, but will continue with deals which are done directly with other governments, Commerce Minister Piyush Goyal told Reuters. The world's second biggest producer of wheat banned private overseas sales of the grain on May 14 after a scorching heat wave curtailed output and domestic prices hit a record high. Global wheat prices surged after the decision. Currently there's instability in the world. If we were to do that, lift the ban, it would only help black marketeers, hoarders and speculators. Neither will it help the really vulnerable and needy countries, Goyal said when asked if New Delhi had any plans to allow private exports to resume.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.